Hey, what's up, ladies and gentlemen? It is Friday, September 12th, 5:56 p.m. Eastern Standard Time. It is amazing to be here in the Eastern Standard Time after, I would say, the first time I really wanted to move to the Eastern Standard Time while I was living in Hawaii was in 2016. So we're quite a few years past 2016, and here I am. I created it. I'm doing it, and it is cold. It is cold. Oh, your good old buddy here. I got acclimated to that warm Hawaiian weather, that tropical weather. Acclimated to it, but nonetheless, here I am in the Eastern Standard Time Zone because the stock market is in the Eastern Standard Time Zone. And today ended, even though it wasn't my first week of being here, I feel like it was my first week of trading. And that's not technically true. If you look at my brokerage statement, you'd see I was making trades the whole time I was here. But the first week, maybe a week and a half, I can't quite remember, but definitely the first week, I was trading off of my phone hotspot. So even though I use generally using two computers to at the moment to trade, it's not so much because I want two computers, but this is an easy way to give me three monitors. And nonetheless, I was only using one computer, so I felt a little handicapped. And then eventually, I have a little bit more permanent internet solution, even though it's not quite 100% permanent. It is more permanent than what I was doing. So now I have my old school Hawaii setup. And speaking of the setup, are you familiar with the Buffett indicator? You can get it right here, right there at the buffettindicator.com. How amazing is that? You can see it. Not only can you see it, but you can read through it, read the history. You can read. We built we built this real-time indicator fueled by quarter pounders and Coca-Cola. All right. So go ahead and take a look at that. Read through the Buffett indicator and decide for yourself if 217.14% is a good number. Is that a good number for the Buffett indicator? Another thing that you can look at, which I look at, forgot, this is a real life trading report. I don't have to tell you what you can do. I'll tell you what I'm doing. I'm definitely looking at this. And I'm definitely looking at this. So overall, the MMRI has been going down. And we have over here at the St. Louis Federal Reserve Bank, which these guys aren't inviting me to any of their meetings. The guys and gals of the Federal Reserve, shame on them. They're not inviting me to any of their meetings. Don't you think I want to come to some meetings once in a while? Come on. Anyways, unemployment. And the reason why I've taken a particular interest in unemployment is if you are unfamiliar with the work of Mike Green from Simplify Asset Management on passive investing, then when you're ready to curl up with some good information on maybe a Monday, a Tuesday, a Wednesday, a Thursday, a Friday, a Saturday, a Sunday, any day of the week, learning about passive investing from Mike Green is good for any day of the week. Now, it's not passive income. We're talking about basically, in a nutshell, I'm paraphrasing. I'd probably be scolded by Mr. Green for this bad interpretation of passive. But, you got 401ks that money is coming in every, whatever it is, every period. I don't know if it's every week, every month, every quarter, but it's just buy. So money is flowing into the stock market, just passively buying, whether it whether it makes sense to buy or not. It's not like this money is before it purchases. It's looking at, what's the EBITDA over here? Is the PEG ratio any good? What's the book to sales? There's no discretionary thought. It's just passively buying and buying and buying. So what would happen if unemployment, so there's not the same amount of 401k money pumping into the market? What would happen? What would happen, or what did happen in the past when unemployment peaked? What might happen again in the future? So that's one thing that I've been paying attention to. Obviously, it's updated on the 5th, but I don't know if it was calculated on the 5th, because here we are. It looks like June 2025. So these are some things that I've been paying attention to. And of course, it's probably not obvious to you, but it is definitely an obvious and of course to me. I'm watching the futures. Okay, this one's really not a future. And that's not a future either. This is my simulated trading account. In my real trading account, I do have the futures of the VIX. But all these other ones are futures, and you know they're futures because there's a backslash in front of them. Gold still ripping to all-time highs. I think I had said this in a video before. If you didn't know that gold sooner or later had a good chance of going up, then I really don't know what you've been paying attention to for the last 20 years. Because even before 2007, when I first started learning about trading, even before then, people were talking about gold and silver going up. So let's just say it's 2025. Let me get out my handy dandy calculator, because even though I'm a stock guy, I am definitely not a math wizard. So 2025. Whoa. I guess I'm time traveler too. Minus, I first started learning about trading in 2007. So over 18 years ago, people were already talking about gold and silver going to the moon, or whatever, whatever stupid phrase that is trendy to use nowadays. Please insert that stupid trendy phrase, which if you're a trendster, you probably don't think it's stupid, but I'm not so much into trends unless I'm following the trend of an asset. Anyways, so that's my point, is like, some people need to get their head out of wherever it is and put it into where it's not. Some people really need to put their head into listening to other people, reading other people, learning from other people, thinking about this stuff and putting it together, because this should not be hitting you as a surprise. If you're shocked over this, you shouldn't be shocked. I don't think you should be shocked. And then if you are shocked, then you got to figure out a way to get positioned. What's your position going to be? So hopefully you already are positioned. No comment on myself. But again, no one should be shocked over gold and silver hitting all-time highs. Bitcoin kind of making its way up again, which, interestingly about Bitcoin, at first, what I had learned about Bitcoin X amount of years ago was that this is a cryptocurrency. Currency, like the dollar, like the yen, like the peso, like the euro, a currency that you could buy and sell things with. But I remember around 2016, it seemed to get a little bit hijacked. The whole idea of a currency seemed to get hijacked, and it seemed to turn into a speculative asset that you're going to buy low and sell high. And around this time, it was getting like, I think the CNBC or whatever these popular TV shows that they get up there and flap their lips about money and all this stuff. They're talking about the price of Bitcoin, the price of Bitcoin, the price of Bitcoin. And I was thinking, whoa, what happened to being able to pay a mortgage or pay a rent or buy some eggs or go to the car wash and not have to use USD. What happened to that? I thought it was cryptocurrency. But nonetheless, nonetheless, here we go. So now we got not only did it convert to something that allegedly was a currency and turn into some sort of speculative asset. Not only that, but it's like the whole mainstream. I don't know what. Please insert whatever proper word that you feel it needs to go here, so we're not bickering in the comments about oh no, it's not this, it's that. It seemed to have converted to something else, and now you got like, not only does the government seem to be really getting in on it, and why would they be getting in on something that was going to be competing with the dollar? That's their currency. They want you using that. That's why you got to pay taxes on the dollar, right? So, but now it seems to be the whole cryptocurrency thing is about buy low, sell high, and as I mentioned, I noticed it around 2016 when that was happening. Is when I at least noticed it. And now, we got ETFs, we got all this stuff. There's all this whole financialization. And that is, I don't know if that's either here nor there. I don't know, whatever. So that's what Bitcoin's doing at the moment. Oil. Yep, oil. Oil has a lot of leverage. So people in 2016, when I found out I could not buy Bitcoin because I lived in Hawaii, and at that time, Hawaii, I think they might have allowed their Hawaiian banks to own Bitcoin. That's what I heard. I heard some rumor like that. But I definitely was not allowed. And so after, pouting and crossing my arms and pouting for X amount of time in the corner, I took my toys home and decided not to play, and I just figured, why don't I just trade some oil? Because it's leverage. We got big leverage here, 1,000 to 1. You know that for a $1 move in oil, your position changes by $1,000. You're either going to be up 1,000 or down 1,000, depending on how you're positioned. So oil definitely has some large leverage in there, which is fun to be trading. And fun if you're positioned right. It's not fun if you're not positioned right. But overall, the trend of our indices are going up. We got a big week in those. In the VIX has it's down here around a little bit under 15. So this is what I'm definitely watching this for a number of reasons. One reason is I do my best to time selling option premium with a rise in the VIX. Now, it doesn't always happen, but I'm doing my best to accomplish that. So over here, obviously, would have been a good day. The other thing is that as the stock market is tumbling down, the VIX is usually skyrocketing up. Can you imagine for one moment, just close your eyes and let your imagination take over? And if you feel like you don't have an imagination, then I would say you should probably not have that inaccurate feeling. But if you want to believe in fairy tales, go for it. So, anyways, let your imagination that you might not believe that you have one. I'm sure you do. So, can you imagine if you were to have shorted some options? You brought in some premium up here, anywhere up here, and then boom, it just comes down like this. Just even if the stock price really didn't move, which it probably did with this coming down, but just the change in volatility, it is a beautiful, beautiful thing. The Russell, so we're looking at 9 months. on a weekly chart. Why 9 months? Because that fits really well into here where I can see it. That's why. But yeah. And I had I had what did I have? I had to reposition some short naked calls on Tesla this week, which I'm happy to say have expired worthless. But I did have to do some rearranging, and it was not fun. However, actually, it is pretty fun. That's why I love doing this. It was intense. It was intense, and I rolled one out in time quite a bit, and my strike is now a bit over here somewhere. I'll say it's somewhere up in here, and I feel pretty darn good about that. But I did have to make some adjustments, because Tesla really ripped up. How far is it going to rip up? Not sure. And not only did I do that, I had a great time day trading Tesla stock. It is fun. You know what's so much fun about day trading stock? You don't have to worry. You don't have to worry about volatility, time decay, gamma. It's just straight numbers, just the stock. It's so nice. So I'm very thankful that I had the opportunity to be day trading stock this week. That was fun. And what's also great is you really don't necessarily need a whole lot of shares. Like for example, one if you just had one share of Tesla, you could have made somewhere around $27. And I know to the big ballers like you guys that are dealing in the millions and the half a millions and the 100,000 levels, like $27 that's nothing to you guys. That's chump change. You're probably not even bending over on the street to pick that stuff up. But to a little guy like me, I'm taking that $27. I'm taking those $30. I'm taking those 15s. I'm taking everything. I'm taking anything I can get because I like economical cars. I like a car that I could fill up half a tank with like $25. So if I just pulled in 27, which just between you and I was more than 27, I'm just saying in general that there was a lot of movement in the stock. And if you find a stock that, let's say, has a pretty good ATR, average true range, and it's going to be moving, if the average that Tesla normally moves is $32 in a week, and you're able to take a couple shares, and maybe you're able to get half of that movement, it can add up. So, people like me, the little fish like me that aren't the multimillionaire big dogs like you out there making the big bucks. So we us little guys, we got a way to play that too. So that's what I was doing. Of course, another one that that I've been trading. This one I had not day trading, but I I was short put options at 160, 160 strike price, which I got assigned when it dropped down here. So I got assigned. Forgot if it was this week or this week, but I got assigned when it was down here, and I no longer have those shares at 160 because boom, this week was very nice. Where did I sell those? Where did I exit out of those shares? $160 and one penny, of course. I got to get out as soon as possible. No, I'm just kidding. So yeah, so I had some good fun with that, and I don't mind I don't mind. It's not that I like, but it's true that I don't mind selling before, like not selling at a top or not buying, definitely not selling at a top, not closing a position for maximum profit. For example, if I would have been able to sell all those shares at, 171, that's pretty darn close to the top range of this week. But I personally don't mind that. And the reason why I don't mind that for myself when I'm doing not investing but trading is I want cash. So as long as I'm making money and I'm hitting my profit targets, I'm good. Plus, back in the day when I used to listen to Greg Manarino quite a bit, I remember hearing him talk about selling early. Selling early. I just saw something amazing. I moved to this Eastern Standard Time zone, and I think it's Luke Groman that often talks about what's normal for the spider is chaos for the fly. And I have this really big spider that's outside of one of my windows here, and it happens to be that I have the curtains open, and out of my peripheral vision, I saw a pretty big insect fly right into the spider web and get stuck. So right now, the spider is euphoric, and this insect is probably in a lot of chaos. Which we can compare this to try to be on the right side of a trade. Try to be on the right side. If you're on the wrong side of a trade, then what's normal for the market maker is chaos for the retail trader. In one thing that you can do, and one thing that I'm normally doing is make sure you got a good amount of buying power available. Don't run low on buying power. I know I made a video, I think, was it last week or the week before? I'm not sure. And I said I kind of like to keep like a minimum buying power of about 30,000. And then when I was done making that video, I thought to myself, well, that's not 100% true. It's usually like 30 to 20 to 30,000, somewhere in there. But my good friends, today my buying power got as low as 13,000 and some change because I had so many positions on, and 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 I just kept taking more positions. Lots of day trades today, and how else? I don't know. It was some. I think now this one I really love. I love. I love strangling the stock. It is not. It is not the. It is not the easiest stock to trade options on. The volume pretty much sucks. The bid ask spreads are horrendous, but I really love this. And it is it's an expensive stock. It's around getting close to $1,000 stock, which basically means because it's high priced and maybe more than just high priced, maybe because it's high priced. And let's see what's its implied volatility. Ooh, not that good. But for some reason, oh, for some reason, like I'm consistently doing these short term strangles on this. And I think so far I've only had to, I think I've rolled a put one time. And that was, I think only once out of week after week of strangling this, I only got into trouble. But even down here around the 850, you had a 5 delta. Right now you're looking at around $100. I'm not sure if being that this is a simulated account and the margin's probably going to be different in your account, but looking at about a $10,000 buying power effect, which I think is right around what I'm normally doing. It seems like one strangle, so one call, one put, usually taking up for me somewhere around here. And the other thing about this one that sometimes it what will happen is these bid ask spreads become so big. Let's see if anything left over from here. These bid ask spreads, like this is what will happen pretty often for me, at least, is let's say if I was whatever. Let's say we're short the 117.50. There's no bid, and your ask is 65, so your mark is going to be right in the middle of that. So you're at like whatever that is, 37, somewhere in there. Let's just say it's like 30 to 40. So if you wanted to close the position, and think maybe, I don't know this for a fact, but I've noticed that my buying power requirement will be creeping up because it'll have some crazy bid ask spread that sometimes it's like this 100. It's like 100 or 70, and then even though that's like there's no demand here, and usually for me what I'm doing is I'm selling like 5 delta or lower on now, because I don't really want to deal with too much crap. I think that's the only reason why I've had to roll at one time. I mean, it moves quite a bit. Let's say, for the expiration next Friday, it's pricing in $35 either way. Let's look at what's the ATR over here. So weekly ATR of about on average right now of almost $65. So you can imagine, like you like selling if you sell too close, you might get you might start getting stretched. So that is one I'm consistently trading. I had a good time with that, and that yeah, I had I don't know how many strangles. Not as many strangles this week as I had last week, but I had bigger positions on, which is really great. And obviously I mentioned about the I took assignment of shares of Palantir, close that out. I think one of the greatest things that I'm noticing is being in front of the computer Monday through Friday before the market opens. I'm normally getting in front of my computer probably around 8 a.m., checking everything out. If I'd like to be there a little bit earlier, but somewhere in there, 8 a.m., and I'm definitely glued to the screen until after market close. But the ability to watch things and allow my mind to lead me to looking at different things and just be aware and watch things, try different things in the paper trading account. I think that for me is really wonderful. I can tell though that it's not for everybody. Some people, just like I have a lot of experience with face to face sales, and that's not for everybody. But for some people, it can be a really good time. I would imagine being a bouncer or being a basketball player or being a farmer or being a doctor or being a nurse or being an attorney or being a software engineer. I imagine there's all these different jobs out there that they're not for everybody, but for some people, it is really like in their core. And right now, that is where I am. So with that, 30 minutes longer than the last one, I'm gonna I'm gonna see what's gonna happen with this spider. He's got this. He or she has this insect all wrapped up, and that insect is doesn't seem to be going anywhere. But the spider isn't eating anything. Oh man, I should take a picture of this and find a way to send it to Luke Groman. What's normal for the spider is chaos for the fly. You guys have a fantastic weekend. Aloha.